Good afternoon and welcome to the Boring Millionaire podcast. Today is Monday, August 11th, and in this episode, I'm going to be going over what the stock market has been doing for the month of August and where I think we're headed for the rest of the month. So we'll start with Friday, August 1st. We did see a sharp down day, and on that day, we declined about 2% on the S&P 500. So the S&P 500, for anyone new to the market, is the general benchmark that shows the pace that the stock market is going. It's basically a measurement of the stock market. So with that said, the S&P 500, the stock market, was down sharply Friday, August 1st. We made most of it back the following Monday, and then Tuesday we gave a little back. Wednesday we were up a little bit. But then this past Thursday, we did see the S&P 500 get back to that 6,400 range. Friday, it kind of hung out there, and then today it did chill out a little bit, and we did see a little more red in the market. So we have been moving higher from that down day, and at that down day, the worst of it, we saw 6,200 on the S&P 500. So I do think 6,200 is the lowest that we're going to go. That was evident on that Friday down day, and we've only been moving higher since then. We are moving at a very, very slow pace, and the reason I think we're moving at a very slow pace is because earnings season is over, and there's not really any strong news that's surrounding the market at this time. Last week, we had a Federal Reserve meeting where they did not cut rates, so that was not really any positivity coming from the market from that. Earnings were all good all around, but they are now finishing up. So the market is going to look for something else to kind of dictate what direction that we go in. Right now, we're in what they like to call a wait and see moment. So the market is waiting and seeing what happens next. But with that said, there's a lot more buyer volume in the market than there is seller volume. So what that means is a lot of people are hanging on to their stocks. They're not trying to get cash for their stocks and exit their positions. They're just hanging on. They're waiting around to see what's next. But at the same time, there are more people showing up trying to put money in the stock market. So that is an incentive for sellers to raise their prices and inevitably sell their assets. And what all of that means is there are more people trying to go higher than there are people trying to rush out no matter what the price is. So all positive signals for the market overall. I do think this buyer strength is going to send us higher. And I do think once we start to notice that the market is heading higher, there will be a lot more positive aura around the market that'll inevitably add to the fuel and continue to send it higher. Now, I use the word aura. The textbook definition is animal spirits, and what it actually means is the aura of the stock market. So as we move past earnings and as more buyers come to the table trying to raise the prices of these stocks to get into the market, we are going to see that animal spirit and aura raise, and we're going to see more of an upward trend come from all those things said. Another thing I'm looking at this week is the volatility index. The volatility index is the fear factor of the stock market. So despite the market kind of hanging out and not really going anywhere, the volatility index continued to decline. So basically, as stocks stood still, the nervousness in the market lowered. So that's inevitably a great sign for the market, and that is something that will later in time be a positive signal for buyers coming in. So with all things said, I do think the market is going to continue moving higher. I do think it's going to be at a very slow pace. But with that said, I would be a buyer of any discount that you see in the market. And I would hang on to the positions that I do have, as I do expect the S&P 500 to rise to 6520 or 6580. Again, I would like to just reiterate, if we were to see some bad days or even a slow decline, I do think the lowest we would go is 6,200. And even at that point, I would be a buyer of the market. So just to answer a question you may have, how would you be a buyer of the market? One way I like to do it is buying the UPRO S&P Double Weight ETF. And what that does is it invests you in the stock market as a whole. So if you do see the stock market down one day, you don't have to think about what stock you actually want to buy or what might be the best move for you. You could just put some money into that UPRO, and then that way you're invested in the stock market as a whole. And when it inevitably continues to rise higher, you will benefit from that. So you could feel free to follow me on Facebook, Instagram, or Threads. And all episodes of my podcast are on YouTube, Spotify, and Apple Podcasts. I like to do one market broadcast every week, but alongside that, I pick one particular stock that I like to highlight, and I like to give my 5 picks for the week moving forward. So if you're interested in more videos and more content from this podcast, feel free to find me on any of those streaming services, and I'm always available for any direct questions that you might have about the stock market. My mission is to not only make you money with the stock market, but to make sure you're doing it confidently. So thank you for tuning in, and I'll see you next week.